Welcome to another episode of the Real Estate Market Minute. My mission is to help you better understand the latest trends in the U.S. real estate market and share with you my analysis and industry expertise. I want to help you gain an advantage and feel confident whenever you're buying and selling real estate. I'm your host, Mark Salib. I'm a passionate real estate professional, advisor, and investor, and I love what I do. Follow and DM me on Instagram at The Salib Group. Send me an email, mark@thesalibgroup.com. And as always, thank you for tuning in to today's show. All right, for today's show, I want to break down some of the most current data we have on homebuyer activity. And more importantly, what it's actually telling us about demand. I like this data a lot because unlike other housing reports that tend to lag by a month or sometimes even longer, this data is coming in weekly. It comes from Redfin. Redfin puts out a weekly housing market update, and its most recent release came on April 24th, so just the other day. And this is why I think it matters. Redfin is not just aggregating this data after the fact. They're pulling it from a real-time data set that comes directly from the MLS, and I'm talking MLS throughout the entire country. They also pull from their own brokerage. So they get real-time buyer behavior, and they look at stuff like tours, meaning, home tours, offers, transactions. So instead of just looking at what happened a month or two ago, this is probably the closest thing or one of the closest things we have to actual real-time data and at least a real-time read on buyer demand. So if you want to get a good picture of buyer sentiment as real-time as you can get, you look at what they're doing. Are they making offers? Are they touring homes? Are they closing deals? Or are they pulling back? All right, let's look through the national data here that just came out the other day from Redfin. And basically it's this. Median home prices are still up 3% year over year. So prices are holding strong. Again, this is at the national level. Understanding real estate obviously can change from each locale and each region and even metro. What else? So we got up 3% year over year, the median home value. We have pending home sales are down at this point from 2 to 4% year over year. So there's fewer buyers actually going under contract is what that really means. What else? New listings are up about 8% to 10%. And overall inventory is up also from 12% to 15%. Now this data is year over year. So we're, as I mentioned, that includes the new listings data. Everything is from 1 year ago to now. So once again, median home values up 3%, pending home sales down 2 to 4%, new listings up 8% to 10%, and overall inventory up from 12% to 15%. All right, so what's that mean? We're seeing supply clearly increasing, and it's increasing faster than buyer demand. What else do they cover? Homes are now taking about 45 to 50 days on average to sell. This time last year, homes took 30 to 35 days to sell. So it's a pretty decent slowdown. Again, telling you and sort of signaling that homes are staying on the market a lot longer. 35% of listings are seeing price cuts. Oh, that's a lot. So 1 out of every 3 homes is reducing its price. That's pretty significant. And the sale to list price ratio is also way down, showing that buyers are negotiating. Again, instead of paying full asking price, they're not. They're paying less than asking price more often than not. So when I look at all of this data, what is it telling me? Well, I do see buyers are still in the market. They haven't disappeared, but I would call them a more cautious, more selective buyer, maybe a less aggressive buyer than before, is how I see it. Now, what else? Redfin also covers regional metro data. So let's break it down by market. I took a sort of a sample set of some cities that would kind of cover each of the different regions in the country and give us a good idea of what's going on. And as I read through the data, what I wanted to do was just sort of summarize what I saw in the data. Sometimes that's a little bit more helpful than just numbers, and it gives you a good, clear picture of each one of these locations. So I wanted to start with New York City. So New York City To me, when I looked through it, I thought it was holding up better than most markets right now. In general, prices have remained relatively stable. Inventory, it started to look like it was increasing. Supply looked somewhat constrained, even though inventory was increasing. So buyer demand, it's okay. It hasn't dropped off sharply. But I would say overall, I thought New York City was showing some decent resilience compared to other parts of the country. All right, let's take a look at Miami. So what I noticed in Miami is there's a little bit more of an obvious shift going on in Miami, where you are getting much more inventory. And it's quite noticeable how much longer homes are taking to sell. And it's becoming much more noticeable about regarding price reductions. Prices are getting slashed by sellers, and it's becoming much more common than it was a year ago. There is still some buyer demand. It's not that it's left, but it's just softened. And I noticed especially in the higher price points where affordability is becoming just very tough for the median household income. Took a look also at Dallas-Fort Worth. So Dallas-Fort Worth, I noticed a pretty noticeable increase in inventory and a pretty noticeable increase in new construction. More homes. There was a lot of new construction homes for sale in the Dallas-Fort Worth area. More homes were on the market because of that. So what it does is it gives buyers a lot more options than they would have otherwise had, say, a year ago. And so it does slow down price growth, and it does shift negotiating power more towards buyers. That's in the data. It looked pretty clear to me in Dallas-Fort Worth that that's what we're seeing based on this Redfin report. Took a look at Los Angeles. Los Angeles, surprising to me at least, inventory still very limited in Los Angeles. So home prices are doing okay. Again, this is the greater LA area, so there's going to be different neighborhoods, different parts that are going to act a little bit different, much like Miami and New York City. But in general, the data in LA told me that buyers are still cautious. Affordability is still a challenge for sure, but demand is not that weak. I think it's just the tight supply, the limited supply is keeping it so that it looks like demand is there because of the limited supply in Los Angeles. All right, Seattle. Now, Seattle clearly went through a correction already over the past couple of years. And from what I saw year over year, it looked like it was starting to stabilize. You were getting more inventory for sure. But price growth, at least, it's still slowing, but I would say it flattened out. More selective buyers, I thought, are being much more selective based on the data. But I would call it a balanced market compared to before. Seattle wasn't. If anything, it's just kind of stabilizing. Chicago. All right, I want to look a little bit in the Midwest. Chicago, major city in the Midwest, showing definitely a more steady, and stable housing market. You are seeing some rising inventory, but there is demand. Not aggressive, but there is demand. But in general, home values have remained pretty stable in Chicago. No big swings there as far as price or the market in general. But it's just moving at a very measured pace. Chicago looks very stable. It's the best way I can put it. All right. Now, big picture. Inventory rising, homes sitting on the market longer, and more price reductions, fewer deals getting done. That's the best way I could summarize what the national data from Redfin is telling us. Again, real-time data here. And it's just, I look at it as like that's what it looks like, right? When demand cools, right? When you have affordability challenges and higher rates, that's what it looks like. I like this report. It's the kind of data that I think matters a lot because you get an idea of a shift in the market before it actually shows up in the aggregator, sort of like in the data that comes out later and lags a little bit. This is a little bit more real time. So I like that. So the question is, are buyers stepping back? Is this temporary, or is it part of a longer shift in the housing market? So that's what we got to keep watching, right? As we keep looking at the data to see where it's going. Again, each region, each city, each metro, if you notice, a slightly different story than the other. Really important to understand the difference and know your local markets. That's how you'll know where and when to act. That is it for me today. Thank you so much for listening to today's show. And as always, if you have questions or need specific advice, ideas, or just some help regarding your particular real estate needs or situation, or if you're just looking to buy or sell real estate in Florida, well then DM me on Instagram at the Salib Group, or just send me an email to mark@thesalibgroup.com. Don't forget to leave a rating for the show, follow, subscribe, help others find the show, and be informed and educated about the real estate market just like you. Until next time. Before we end today's show, stop what you're doing and subscribe right now to Real Estate Market Minute Plus. Listen to all episodes ad-free. Get exclusive bonus episodes and content and help support the show's growth, longevity, and future improvements. Go to realestatemarketminute.supercast.com right now. You can also find the link in this episode's show description. Check it out. I know you'll love it.